If you ever try to research a cryptocurrency before deciding to invest in it, you will probably hear the term market cap. The market cap of any cryptocurrency is a simple, direct way to finding out how big or how popular a cryptocurrency is right now. In this video, you will learn what is a crypto market capitalization and how it is calculated, the differences between large market cap cryptocurrencies and small market cap currencies, and finally, the drawbacks of using the market cap only to make investment decisions. So, let's get started. A crypto market cap is the total dollar value of all coins of a cryptocurrency available in the market right now. Or it can be said that it is the total dollar value of an entire cryptocurrency. For example, the market cap of Bitcoin is approximately $1 trillion, which is the total dollar value of all Bitcoins in the market right now. The market cap of any cryptocurrency is calculated by multiplying the market price of one coin by the total number of coins circulating in the market. For example, to calculate the market cap of Solana, we multiply the total number of Solana coins, which is 304 million coins, by the market price of one coin, which is $210 as of the time of this video. This results in a market cap of over $63 billion. An important point here is that the market cap is calculated using the circulating supply of a cryptocurrency, which is the number of coins available for trading in the markets or held by owners. This is different from the total supply of a cryptocurrency, which includes locked or reserved coins. The market cap can be an indication of the popularity or dominance of a cryptocurrency in the market. And as you might have guessed, the market cap is impacted directly by the price of a coin. If the price of a coin raises, then its market cap will increase, and if the price falls, the market cap of a cryptocurrency decreases. But that doesn't mean that an expensive coin is better or more popular than a cheaper coin. For example, the price of Monero coin currently is at $235 per coin, and there are 18 million Monero coins currently in the market. This gives us a market cap for Monero equals $4,248 million. On the other hand, the price of one Cardano is $1.62, and there are more than 33 billion Cardano coins in the market right now, giving us a market cap of more than $53 billion, making Cardano the sixth most popular cryptocurrency right now. We will release a full detailed video about Cardano soon. Subscribe to our channel so you don't miss it. Now we're going to talk about the differences between large market cap, mid-market cap, and small market cap cryptocurrencies. Large market cap cryptocurrencies are cryptocurrencies with a market cap of over $10 billion. They are considered relatively safe investments. These cryptocurrencies have high liquidity, high trading volume, and low prices volatility. The liquidity of a cryptocurrency is a way to measure how easy it is to cash out your crypto into cash without the price dropping. On the other hand, the volatility of any cryptocurrency is a way to measure how much the price of the coin moves up or down over time. High volatility cryptos can move up a lot or down a lot over time. Take a look on these two examples to understand how volatility works. As the volatility of any cryptocurrency increases, the riskier it becomes, and the more potential it has to go very high in price or very low in price over a short period of time. Examples of large market cap cryptocurrencies are Bitcoin, Ethereum, Solana, Cardano, and XRP. Mid-cap cryptocurrencies are cryptocurrencies with a market cap between $1 billion and $10 billion. These cryptocurrencies have a higher growth potential than the large market cap currencies, but they are more risky and have more volatile prices. Examples of mid-cap cryptocurrencies include Mana, Monero, Phantom, and AV. Small market cap cryptocurrencies are cryptocurrencies with a market cap of less than $1 billion. They are the most risky cryptocurrencies. They have extremely volatile prices, but they have the highest growth potential. Examples of these cryptos include Banker Token and SushiSwap Token. Although the market cap of a cryptocurrency is a useful number to look at, and it offers valuable insights about the size and performance of any cryptocurrency, there are some drawbacks of using it only to evaluate your potential investments. First, there is a common misconception here. Many people think that the market cap is the total amount of money invested in a cryptocurrency. This is totally wrong, as market cap is calculated using current prices, and any small move in the price may significantly impact the market cap. For example, let's say that we have developed a coin. Its current price is $20, and we have 10 million coins in circulation in the market. Our current market cap is $200 million. Suppose that many people invested more in our coin. Total investments were about $3 million, and its price raised to $24 per coin. Now we have a market cap of $240 million. As you can see, $40 million increase in the market cap, with just $3 million invested. So the market cap is not the total invested money. It is the total value of all coins right now in the market. In 2017, J.P. Morgan estimated that every dollar invested in Bitcoin increases its market cap by $50. Another drawback of using the market cap only is the total supply of a crypto. Some cryptocurrencies have a lot of coins not currently in circulation in the market. When these coins are available in the future, they can crash the price fast. Also, you need to be aware of the sharks. Sharks are investors with huge investments. For example, if there is a cryptocurrency with one person or organization holding 15% of all coins, then after a while they decide to sell their share, they could lower the price significantly really fast. Market cap doesn't consider the non-circulating supply or tell you who owns how much of a crypto. So, when you research a coin before making an investment, you have to check other data, like the liquidity of the coin, the number of users currently trading the cryptocurrency, and the monthly trading volumes. Small cap coins, for example, that have low trading volume and low supply, can be manipulated easily with a few $1,000s. Also, you need to consider your financial situation and risk tolerance before making any investment decision. At the end of this video, we hope that you learned what you need to know about the market cap of a cryptocurrency, and if you liked our video, give it a thumbs up, comment if you have any questions, and subscribe to our channel so you don't miss our new videos. Thanks for watching.